Uber is in a heap of trouble. It's down over 40% from its initial price offering, and I think that they're going to go lower. I'm going to give you my reasons as to why coming up. Yes, guys, it's an unfortunate thing, but it's something that we are accustomed to seeing now with these overhyped IPOs, and I don't think it's going to be slowing down anytime soon, and Uber is going to continue to go down lower. I think it ends up being in the teens before it's all said and done. I'm going to explain some reasons as to why I think that is, but before I do, I want to welcome you to this channel. My name is Brad, and this is Own the Chaos. The world of business and finance is a crazy and chaotic world, and I made it my mission to help you own it. So welcome to this channel. If you like this video, I certainly would appreciate a thumbs up, and subscribe if you want to see more content such as this. So the first thing that I want you to do is come over to WeTradeHQ.com and look at this Uber chart. So if you go over to WeTradeHQ.com, create a free account where you can learn and grow and celebrate each other's success, no matter what area in the market you're trading. We want WeTradeHQ to be the place for you. So here we go. Uber had its initial price offering back in May, and the hype was real on this thing. People started to buy this up and it started to move quite nicely, but then everybody started to realize, much like BYND or Beyond Meat, this had a similar type of reaction. It had a nice little run up in July and then continued to come down and down and down further. Now, why is this happening? Well, because of a lot of things. There's a lot of empty promises that the CEO has made that aren't really all that believable. They think they're going to be profitable by 2021. Most analysts and investors don't believe that. They think it's a bunch of garbage. And most people have been very vocal about that. Uber has always been very unclear about their bottom line, and it's really the CEO's job to communicate what exactly is going on with your company and what can we expect. When there's a lot of uncertainty, investors are like, you know what, I'm going to sit this one out and see how this goes because I don't know what you're saying right now. Now, to back this up, an article by Yahoo Finance says that the fact that Uber only now offered more insightful bottom line guidance underscores I'm going to say Dara because I can't pronounce this guy. We're just going to go with Dara. That's his first name. We're on a first name basis with this guy. Lack of understanding on what the investors need to hear from him. And I would agree. This time around, the market ignored the profit guidance, underscoring the growing lack of confidence in Uber's management and sent in the stock further into crisis mode. How else could one view the situation at Uber? You have a highly public CEO in Dara telling the masses that profits are possible soon in an attempt to address one of the biggest mysteries in the tech space right now, and yet the stock dumped. And he even goes on to say, come on, which I think we're all saying that because not only are we worried about their profitability, but that's not even the biggest story here. Today, the lockup period has ended for Uber, and we saw how the reaction was to BYND or Beyond Meat when the lockup period had ended. The stock tanked from $124 all the way down to $80 and even below that. What's going to happen to Uber now that 763 million shares get introduced back into the market after the lockup period has now ended? Well, I think that it's going to be a rough ride for Uber. That adds up to be about $1.7 billion in shares, and I just don't think that the retail market is certainly going to make up for that, nor are other investors, especially given the fact that the CEO still just can't figure out how to manage this business. And it really kind of blows my mind, to be honest with you. When you're looking at a company like Uber, you would think that that business model would crush the competition. Why are taxis even around anymore? But this is my theory, and you can tell me what you think. You can tell me I'm wrong. You can agree with me. I'd love to hear from you in the comments below on what your thoughts are on this. But I think with the overhyped tech companies that are coming about now, this reminds me a lot of the dot-com bubble. A lot of these companies are way overhyped, and so a lot of these CEOs think they have much more to spend. They're spending money before they even realize they have it. Do you know the salary of the CEO of Uber is $6.4 million? Did you also know that SoftBank is involved with Uber, who was also involved with WeWork? And look how that turned out. The thing of it is that everybody likes to compare companies that aren't profitable, that go public, to Amazon, right? That's what everybody said. Oh, well, Amazon wasn't profitable before they went public, and now look at them, which is absolutely true. But the mindset of Jeff Bezos was completely different than a lot of these CEOs. You look at the former CEO of WeWork, Adam Neumann, and he was flying around in a $60 million jet at his leisure, spending money way faster than he was making it. The amount of money that these guys are spending is just mind-blowing. When you look at Jeff Bezos, his company was worth more than Texaco, and he was still riding around in a 98 Honda Accord. So put that in perspective. To take that a step further, as we're talking about Uber, Uber's CEO right now has a salary of $6.4 million a year, and he's managing a business in which he can't really clearly state when they will actually be profitable. So this is a serious problem. The CEOs of these overvalued tech companies have a spending problem, and it's only going to get worse. So at the end of the day, what are we going to do? Well, I think what's going to happen is that this is going to be part of the market correction or recession, whatever you want to call it. You know, we've experienced all-time highs in the market now. And while I think this is a great thing, we always want to see higher highs. I think that we're overhyping a lot of these companies. And when more companies like Uber and Lyft and WeWork try to IPO and they overvalue themselves, investors are going to get sick of the BS and tired, and they're going to be tired of being dumped on with these ridiculous lockup periods ends, that they're just not going to invest in these companies anymore. And that's not going to bode well for the overall market. And I think that's when we really start to see a correction, when people stop overvaluing these ridiculous companies. So let me know what you guys think. Do you agree with me? Do you think that these overvalued IPOs are actually going to be what causes a market correction? Or do you think it's going to be something else? For me personally, I do think that's what's going to happen here. But I would certainly like to hear from you and get your own perspective as well. So leave me some comments down below, and go check out my mentorship, guys. So I have a mentorship where I go live with folks and I trade every day with them, down in the link in the description. It's a great community to be a part of. I highly encourage you to check that out. And also come over to WeTradeHQ.com. It's a free platform where you can learn, grow, celebrate each other's success, so that no matter what you're trading in the market, WeTradeHQ is the place for you. And that's going to do it for me, guys. Thank you so much for tuning in. As always, I will see you all before the bell, and B Smith is out. I'm super pumped about this. This is the most expensive liquor I've ever had.
Yeah, we buy these things unless we get a sponsor.
Yeah, we don't get, so we love you, the horse you rode out on, but we still have to pay for this stuff.
Goodness.